So typically, just so you know, typically, so I was an interpreter for 15 years, and they have ingrained it into us to not sign and talk at the same time because ASL and English are not the same language.
Thank you.
So I'm trying to figure out the best way to still have this type of information accessible
Mhm.
because I have not met, but I've found one deaf mortgage professional and he's Canadian. So it's tough
Yeah.
to have this conversation with ASL without, they call it simcomming, using
Right.
both languages at the same time. So it will be a little bit tough because my brain is trained to not do this. So I might have to ask you to hold on for a second if my brain melts or something.
Yeah. Oh yeah, absolutely. All of that. So when I was in like, I don't even know, like when I was a little tyke, like 4, 5, 6, little tyke, um, I was in a class with a child my age who signed. He was deaf. And I just thought that was so fascinating. I remember going to the library and getting books and trying to learn sign language so that I could speak with him. And I'm not sure where his journey took him, but I still have such a great memory of learning a few words to be able to speak with him.
That's awesome. So you have some experience with deaf too. So that's kind of fun.
Very limited. Yeah,
Yeah,
very limited.
limited. But here in Kentucky, we have a large deaf community.
Okay.
And that's one thing I've been hosting in person classes for the deaf to learn how to buy and sell their homes. And they've been well attended. Typically, between 15 to 20 people will show up. And usually it's different groups of people. So I started to realize this information was lacking all over the nation. And I had many deaf people, friends from all over the nation, coming to me with horror stories about their real estate transactions and things. So I decided to start developing more courses and webinars and teach it online for people all over the nation, not just here in Kentucky. So that's one of the reasons I reached out to you because I noticed many of your videos, they're very knowledgeable and you explained things really well like a teacher. And I thought it would be great for us to kind of pair up with that. So you'd be patient and I can explain it in ASL because I'm not the expert with mortgages, but I try to explain it. And so having someone come who's actually a professional mortgage lender explaining everything would be better.
I love all of that. I'm here for all of that. I just turned my light off because it's so bright. I'm seeing blotches. But um, where are you hosting your, like at libraries? Like where are you hosting your classes?
Um, the first one was in my office. I'm with Lifestyle.
Yeah,
Yeah, right here in Lexington.
yeah.
And then the second one I hosted in Lancaster. I'm a member of the bank there, so I just requested to have the room and I didn't have to pay rent or anything. They gave me the key to the bank for Saturday and went in and hosted the event there. It was really nice. But I want to host it again in person, but I've been since September I've been focused on developing the online stuff, which is way more complicated because I need to have an email system set up. I need to have that automated like messaging. So when they sign up, it will email them automatically. They have the information for the Zoom event, had to pay for Zoom, like setting up everything in the background for an online thing was really complex. So we
Yeah.
hosted our first event last month, January, focusing only on buying real estate. We had 40 people sign up. So next week we have um, the online class for selling your house in 2025. Um, Next week, February 12th. So we're starting to really market for that one. So we'll see. We have a few people signed up, but not close to what we want.
That is amazing. And I think it's incredibly fascinating, period. Whenever I work with individuals that like I've worked with other individuals who like I'm not I've worked with individuals who English isn't their first language. And one of the hard things about that is when you start to interpret, there's nuances in like the lingo of mortgage, like an escrow account or debt to income or your cash to close or your PIT. Like there's specialties that it's a challenge because then the interpreter has to understand it to be able to relay it. So when I hear that you're doing this, I think it's amazing because there are some special nuances to mortgages that as a realtor, you would know what escrow is. Whereas I might not know how to describe escrow to somebody if I'm not speaking it correctly, if that makes sense.
Yeah. Yeah. That's one thing. I started a YouTube channel just explaining terms. That's it. So I'll say like, PITI and then I just say what it is. That's it. I don't expand. I don't say what you're do with it. I just say what the word is so that if they see it on a document or if it comes up in conversation while something is being interpreted, then they can write it down and come back and hopefully see what that means.
What is your YouTube channel?
It's the same as everything else. So it's at the real estate Tony.
Love it. All right. I'm going to check it out.
Well, thank you. It's all in ASL. My other social medias are both hearing and ASL promoting, I guess, because I have a lot. I focus a lot on farm sales here.
Yeah.
So I've been advertising more for people moving into Kentucky from other states, and that's been going well. But the YouTube is focused only for the deaf community. Most of it is interpreted into English and captions, but some of them I just left for the deaf community, or it just took too much to try to add captions.
That's really fascinating. I can do a video on when you're moving in from out of state. We can use your offer letter as your income, as your verified income, as long as it has the date that you're going to start. It's on letterhead. It explains if you're salary or hourly, and it confirms that you're a full-time permanent employee. You can typically, on a conventional loan, close 60 days before your start date of your job, and that still works as your verified income if you're moving in from out of state. So if you ever wanted me, I could maybe do a video explaining that if that was something that'd be beneficial to interpret.
Yeah, I think that's awesome.
Okay.
Well, maybe we could go ahead and start with some of those questions because even like what you were talking about now, that's helpful information for everyone to know.
Yeah, absolutely. Absolutely. Do you want to start or would you like for me to start?
So I have a list of questions. I had posted and asked my followers what they wanted to know about mortgages or getting financing. So I have a few questions that seemed to come up more than once in this last month.
Perfect.
Okay, you ready?
Yes, begin.
So the first one, I'm sure you're getting asked all the time, but I try to explain it, but I think you can explain it better. And it's how can I improve my credit score? And I would add, how do you know if you need to improve your credit score?
Great question. Yes, I get this all the time. So here's kind of like my baseline. Here's like my basic starting point, and then we can kind of delve into it more if we need to. So first of all, general rule of thumb, you need a 620 credit score in order to qualify for a mortgage. Yes, you're going to find people that can qualify you if you have a 580, but you're going to have a lot of additional good factors to your application to get under a 620 and still qualify for a mortgage. Next, while you might qualify for a mortgage at 620, chances are very likely you're not going to like any of the terms, conditions, or rates. The higher your credit score, the better the terms, conditions, and rates will be. So if you're starting, if you feel like your credit score is low, while a 620 will qualify you, a 640 is where things start to get more advantageous. Then there's different tiers. And basically once you get to a 740 or higher, that's when you're going to have the most advantageous loan options and rates. I know this wasn't your question, Tony, but I'm going to throw this in here now. The credit score doesn't just impact, it impacts your rate. It impacts the type of loan you can get. It also heavily impacts your private mortgage insurance. So if you're buying a home on a conventional loan and you're putting 20%, less than 20% down, you'll have to pay private mortgage insurance. And your private mortgage insurance is going to be based on two factors: your credit score and how much money you're putting down. So there are a lot of reasons to try to improve your credit score. The next thing I would say is it's not always hard or complicated, and very often it's not time consuming to improve your credit score. It can be done pretty quickly. Here are the two things that I tell people who call and they're like, where do I start? And say they're in the low 600s. First, there is a thing called Credit Boost. It is through Experian. So you have the credit bureaus. It's when they have credit bureaus. It is free. You can sign up for it on their website. Anything that you have coming out of a bank account being paid automatically by you from a bank account, whether it's a checking account or a savings account, you can self-report to Credit Boost. So you can think about it if it's your gym membership, your auto insurance, a cell phone bill, anything. You can self-report that. What that's going to show is that you can make payments on time. Now, I will also specify at my loudest with all my chest, you only want to do this if you are making those payments on time and you're not overdrawing your account. If you're overdrawing your account, this will do more damage than good. So Experian Boost, sign up, it's free. After about 60 days, you're going to start to see an improvement on your credit score because you're going to start having a on-time pay history. That particular method works really well if your credit score is low because you have what's called thin credit. Thin credit is we just don't have a lot of credit. So that's a really good place to start. The other place, if you have thin credit, and this is going to sound counterintuitive, but get a major credit card from a major bank. And when I say a major bank, I'm talking about US Bank, Fifth Third, Citi, Wells Fargo, not Old Navy in the mall to save 10% on your purchase that day. Major credit card. Try to get a balance of $300 or $500. Charge $10. Not an evening out to dinner, not a full tank of gas, not date night, $10. Let the bill come. Pay it in full. Do it again. Charge $10. Let the bill come. Pay it in full. That's going to do a lot of things for your credit. It's going to show that you can have credit without maxing it out. It's going to show that you can make your payments on time. And after 2 bill cycles, so 60 days, you will very likely see a huge improvement on your credit score. So those are my 2 first step go-tos that are free. I mean, I know you're spending the $10, but it's not a considerable amount of money to get going. So that would be my starting point for a low credit score trying to improve it.
Awesome. I think that's really helpful. Those 2 things will be really helpful for many people. I think the first, I didn't know about that one, the first one.
Yeah.
My sister, she called me recently very upset because she'd worked hard to improve her credit score, but they don't have any debt now. So she called me upset because her credit score is really low, like 500 something. And she was like, I don't know, I don't understand. So I was trying to explain to her, you have to actually use your credit to show them, which is so silly. But I think that using these two methods for that thin credit, like you said, will be helpful. I'll give her those tips too.
Imagine she would see a huge improvement very quickly, especially if she's paid a bunch of things off. If she did those two things, the next thing I would say, the reason Credit Boost works so well is particularly if you have a gym membership and an auto, as an example, say you have a gym membership and auto insurance or a utility bill like a water bill, you're showing 3 different lines of credit. And one of the things that helps your credit score is to show multiple lines of credit. So as an example, Tony, if I had 3 credit cards, but you had your gym membership and a credit card and auto insurance, and we both paid everything on time, you would have a better credit score than I would, because I only have one line. While I have 3 lines of credit, I only have one type of credit, and you would have 3 different lines of credit. So if you're doing Credit Boost and you have multiple things, it really can improve pretty quickly.
Cool. That's awesome. That'll be very helpful. Okay, the next question is, how are interest rates calculated?
Well, that is a great question. Okay, so the long answer is there's a thing called LLAPs, loan pricing.
LLAP.
Loan pricing adjusters. Loan pricing adjusters. And there's many different factors that go into this. So it is going to be based on what is your credit score, what is your LTV, which is loan to value, which is how much down payment did you put down. It is going to be based on what type of property. So if you're buying a condo or a townhouse or a mobile home or a farm or a standalone home, it's also going to be based on what that house is going to be for you. Is it a primary residence? Is it an investment property? Is it a secondary home? So those are some of the big factors that are taken into consideration. And then the next thing that's taken into consideration is the loan amount. There's different tiers on the loan level pricing adjusters. So great question, lots of factors.
So if someone were to call you today and say, hey, what is the interest rate today? Could you actually answer them?
Great question. So yes and no. So legally, I can't say, oh, the interest rate is 6.625. You can't just give an interest rate. Now, I can give you some disclaimers. So I could say, as an example, if you have a credit score of 640 and you're looking at an FHA loan in the state of Kentucky with Kentucky Housing Corporation, at this moment, that rate is 6.75. So I can kind of give you some disclaimers, but if you walked up to me and you're like, hey, what's my interest rate? I would have no way of knowing exactly what that interest rate is. The other thing to know is interest rates change every day and throughout the day. So yesterday we had 3 rate changes. Today we didn't have any. Yay. So I hope that helps. I just lost my light.
Yes, I think that was helpful. Okay. What is the difference between a pre-approval and a pre-qualification?
Great question. My opinion as a loan officer, a pre-qualification isn't worth the paper it's written on. A pre-approval is really what you're after. A pre-qualification is just you and I had a conversation and you were like, hey, Kelly, I think my credit is about 720 and I make about $52,000 a year and my car payment's $300. And I do some quick math and I'm like, okay, you could afford XYZ. It's not really worth anything. Pre-approval is I've pulled your credit score, I've looked at your pay stubs, I've looked at your W-2s or your tax returns. We've had a qualifying conversation. We've talked about what is your monthly go, what is your cash to close go, and I have verified everything that you've said to me. I didn't just take your word what your income was. I verified your income through your pay stubs. I verified your employment. So that's the difference in a pre-qualification and a pre-approval. Pre-approval is much stronger, in my opinion.
Awesome. So how long does it typically take to get a mortgage loan?
Great question. So to get a mortgage loan, typically we run on about 30 days. Sometimes we can do it a little bit faster. On that pre-approval, let's say you submitted everything to me and I went through it, got back with you, and then I went ahead and submitted it to underwriting and I got an underwritten approval. Then we could close faster. So it could maybe take 15 to 20 days. You want to say ballpark 20 to 30 days from when you sign a contract to close on a house.
Okay. So this next question came up 3 times, and I was a little bit surprised because I didn't realize people didn't know the answer to this. So I wanted you to talk about it.
Okay.
The question was, can I buy a house if I already have debt? And one person told me about her car loan and student loan.
Mhm.
And she thought because she already had that debt that she couldn't take on another loan.
Great question. And my brain's going all different directions with it. Okay. First, to answer the question, yes, you can have debt and have a mortgage. Second question. Well, we put a lot of emphasis on a credit score because the credit score is going to determine the interest rate and loan type, etc. It is your debt to income ratio, which is often called DTI, that is going to determine if you can get a mortgage. So yes, you can have debt and qualify for a mortgage if your DTI, debt to income ratio, isn't too high. As a general rule of thumb, you want your debt to income ratio to be below 50%. Debt to income ratio is your monthly expenses divided by your monthly income. Pretty easy. Now, when considering that, in this example with your client, Tony, who said something about the student loans, let's just say her student loan is $15,000. We're not looking at it as though she has a $15,000 debt. We're only looking at the minimum monthly payment. So she has a $15,000 debt, but her monthly minimum payment is $112. We're only charging her that $112 payment. I had a gentleman call me one time who was on a W-2 salary, made $250,000, and I could not qualify him for a house because he had lots and lots of cool cars and lots of cool boats. And there was just no money left over at the end of the month to buy a house. Yes, you can have debt. You don't want to have too much because your debt to income ratio can knock you out of being able to qualify for a house.
So how do you calculate the debt to income?
Yep, absolutely. So we're going to take the monthly debt. So your monthly credit card bill, your monthly car insurance, your monthly student loans, add them up, and we're going to divide that by your monthly gross income. If you're W-2, it's different if you're self-employed. So if you have $8,000 monthly income coming in and you have $2,000 monthly income going out, we'll divide that and that'll be your debt to income ratio.
Okay.
Can I add one thing about student loans on that?
Yes.
Just because you mentioned it, if your student loan, and this comes up a lot, if your student loan is in deferment, if you are looking at a conventional loan, we have to assess a 1% payment to that. So if you have a $10,000 debt in student loans, we're going to assess a $100 payment to it. You don't actually pay it, but we have to calculate it as though you are. because we're going to assume as a lender, one day you're going to have to pay your mortgage and your student loan. So I need to make sure you can afford both. And then if you're doing an FHA loan, we do 0.5%. So if it's a $10,000 student loan, we're going to charge you $50 a month in payment. That comes up a lot about student loans and deferment.
That was good to add. I didn't know that.
Thanks.
Okay. The next one, I think we covered a few when we were talking before. How do I estimate closing costs?
Great question. Get this all the time. So there's a general rule. So first of all, let's talk about what is closing cost, right? And clients ask me all the time, how much is my closing cost? Well, you really want to know is what is your cash to close? So your closing costs are going to be all the one-time fees associated with buying a house. So if there's an origination fee, your appraisal fee, we're going to order a flood certificate to see if it's in a high-risk flood zone. That's $8. It also includes your title work. So those are all the one-time fees to buy a house are your closing cost. Your cash to close is going to be your closing cost, taxes, insurance. Taxes and insurance are referred to as prepaids. You do have to pay your first year taxes and insurance in full upfront at the closing table. And then your down payment. So your closing costs, taxes, insurance, and down payment add up to your cash to close. And that's how you determine what's the amount of money you have to bring to the closing table. Depending upon the area, I hate saying this because I never calculate it this way. I've heard others say this. I don't trust it, but I'm not trying to not answer your question. So I'm going to give you this, what I hear other people say. You can assume that your closing costs, taxes, and insurance is going to be about 5% of the purchase price. You'll have your down payment on top of that.
Okay. Are there other common questions that you typically see?
No, you've done an amazing job. I think the one thing that I tell everyone that I stand on the mountaintops and shout about is, in my personal opinion, as a buyer, you should never buy a house without seeing the loan worksheet. The loan worksheet is the quote to buy that house. And in my opinion, how do you know which house you want to buy if you don't know what it costs to buy that house? So I always encourage everybody to get the loan worksheet. The loan worksheet should have an estimate monthly payment, including principal, interest, taxes, and insurance, or if there's an HOA, and private mortgage insurance. The loan worksheet is also going to have a list of itemized fees. So all the things I just listed about the closing cost. And it is going to also have your total estimate cash to close. So if there's anything that I would ever want any of my clients or anybody that I run across in the world to know as it comes to mortgage is do not buy a house without the loan worksheet. Devil's in the details. Details are on the loan worksheet.
So are you saying before they actually go to see a house, like if they're interested in something, they would reach out and ask you, like send you the address, and then you can kind of work out the numbers before they even go and see it? Or when would you recommend asking for that?
I do. I send it to my clients before they go and see a house. So once I have an application and I've got their pay stubs and I've got everything's in the system, it's very easy for me to update and spit out a loan worksheet. Like getting it started takes time, right? That's what we do though. That's our job. But once it's in there and you're shopping for different houses and a new house pops on the market, my clients will text me an address like, hey, we're going to go see this tonight. Can you send me the loan worksheet? Absolutely, I can. Now, the thing to remember too is, if you're looking at a house that's $350,000 and then you see a house for $349,000, you're more than welcome to call and ask me for a loan worksheet, but the $2,000 isn't going to make a difference. Not a significant difference, but if you're going from like 325 to 350, absolutely call and get the loan worksheet from your loan officer. in my opinion.
Okay, that's a good answer. So that's all that I had. Is there anything else that you want to add or want to talk about?
Well, can I ask you some real estate questions that I get?
Yes, it will be a little bit difficult for me to try to sign and talk at the same time, but let's try it.
Okay, we'll try it. So my clients will call me a lot and ask me a lot of questions. And what I always say is, I'm the loan officer. I try to stay in my lane. That's a real estate question. Your realtor help with that. So one thing I would just note is that as loan officers, we don't negotiate. You don't want me negotiating on your behalf. I'm not good at it. Realtors are good at that. So question that popped up for one of my clients, they were putting in an offer and it was going to be, they felt strongly it was going to be multiple offers. It was a house in Lexington under $300,000, felt like it was going to go quick, multiple offers. Their question to me was, should they do an escalation clause? Or should they just try to go in $8,000 above purchase price? So my question to you then is, and I know it's different in each house, but can you explain what an escalation clause is? Am I saying that right?
Yes.
Escalation clause? Okay.
Yep.
Yeah.
So first I'll explain what it means. So it's kind of like a bidding process, but silent. So if, for example, the house is worth, or they're asking $300,000, but you know that it will be multiple offers, and you can't change anything else inside of the offer. So, for example, I never recommend that they waive inspection. Some people will say, oh, well, you can just come in at the 300,000, but you're going to waive inspection, because that will cost you a lot more than trying to add an escalation clause of $5,000 or something. So I always want to add that too, that it's never a good idea to waive an inspection. So for an escalation clause, if it's $300,000, but you have the ability to buy the house for $320,000 and you think it's worth that, then you could put down saying my offer is $300,000 up to $320,000, but I'm willing to go up in $5,000 increments or something like that. So you could even add that part as well. So that means if another offer comes in at $315,000, your offer now beats theirs price-wise. But if there's an escalation clause used, the realtor must show proof why they used it. So you can feel confident that they're not just going to say, oh yeah, we had another offer that was the same, so we chose yours up to that amount, right? So one of the reasons I also suggest to say in $5,000 increments is because if you offer $320,000 and the other offer said $310,000, then your offer, if they accept it, would be $315,000, not up to the 320. But if you just put down the escalation clause up to 320 and they accept yours, they could use that number. There's the other thing that I wanted to add with that. If you don't have that extra $20,000, then you have to make sure that the house will appraise for that, because the lender isn't going to lend on the house if it's not worth that much. And typically, if a house is listed for a specific number, the realtor that listed it already did the same comparables that the appraisal will find. So if you want to offer that escalation clause, you need to make sure that either the house will appraise for that or that you have the extra money to bring to closing.
I love your explanation. I wish I would have hit record. I can just play it back for people.
Well, this will be recorded.
Oh, awesome.
Right? So
Yeah,
it saves. Have you done a live before?
I have done a live before. This is my most fun one so far, though. I didn't realize it saved and recorded it, though.
Yeah, there's a spot in your profile that saves all of the lives.
Good to know.
Yeah. If they're longer, it takes a little bit, so it'll probably be like 2 hours later it'll show up.
Okay.
But you can download it to your phone and splice it up and post parts of it too on your social media.
I'm going to do that.
Yes, yes. I want to download it and just upload it to my YouTube just as it is so
Oh,
people
great
can see it
idea.
and can watch if they want, and then it'll be good.
Yeah, great idea. Can I ask you another question I get all the time as a lender that's not a lender question?
Yes.
Clients will say to me, well, if I have to buy the appraisal, why do I need a home inspection? Can't I just skip the home inspection? I have strong personal opinion on this that you should never skip a home inspection, but you're the realtor and I want to hear your input on it.
That's a very good question. And one day I'm going to have that answer from an appraiser and the answer from a home inspector. And I'm going to put them side by side for people to see. So it's often misunderstood. They're not the same thing, and they're not even the same certifications. They don't do the same thing at all. So the appraiser will go in and make sure that everything inside the MLS matches what was said on the listing. So they make sure it has how many bathrooms or bedrooms and how many bathrooms. That's my brain trying to do two languages at once. Like actually measuring the square feet, double checking to make sure that the basement is finished or not finished or that type of stuff, because that's what adds the value of the home. The home and that's required by the lender. So even if you skip the inspection, you have to pay for the appraiser. You have to. I also want to add here that the lender requires it, but if you pay for a home in cash, you don't have to get an appraisal. However, as a real estate investor, I always still pay for both because I don't want to overpay for something either. So the appraiser will do more research and make sure that the home is worth what I said I want to pay for it. And that's why the lender requires it, because they don't want to lend more money than it's worth. The inspection will look at things like foundation, the structure, make sure that nothing is leaking. If you have a good inspector, they have like heat measuring things. They will double check. So it goes behind the walls to make sure that there's nothing like mold growing. Make sure that the roof itself is structurally sound and not missing something. They double check to make sure that all of the things that are currently code are there, especially related with like GFCI plugs near water. I just signed toilet near water. The appraiser doesn't care if you have the electric tripping. It doesn't matter to them. And they're not going to double check the electrical panel. They're not double checking to make sure that the plumbing is working appropriately. So they're very different roles, and both are very much needed because this is the biggest investment that you've probably made.
Yes. Can I add one thing just as an example that I recently
Yes.
experienced? I worked with a client who just bought their first house, and the appraiser was there 4 times. On the seller's disclosure, it said that the HVAC, what am I trying to say, Tony?
HVAC.
That's the one.
Yep.
They had two hot water heaters, were all installed in 2024. Even though the appraiser was there 4 times, when the inspector went out, the inspector said, well, these items are from 2020 and 2021. They're very old. And when the buyer's realtor called the listing realtor, she said, I said they were installed in 2024. I didn't say they were new. And the buyer was upset that the appraiser didn't mention that. And that is an example of where the appraiser makes sure that there is an HVAC unit and that there is a hot water heater, but they don't turn it on and test it or check it for quality, whereas your home inspector would.
Yes, that's a great example. That's frustrating also because as a realtor, you really have to dig deep for everything because there are some people out there that are trying to trick you and it's frustrating.
Yes, I agree. I agree. Can I ask one?
Paul Bradley is here and he's saying wonderful information.
Oh, thanks. Can I ask you one more real estate question?
Yes, please.
And again, I have personal opinions, but you're the realtor. Is the final walkthrough really that important?
Yes. I will give you one of my favorite examples. It's always important, doesn't matter. I could tell you 1,000 different examples of why it's important, but my favorite, we had a window that had to be replaced. So 2 days before closing, the buyer was an older woman, so I went for her because it was an hour away. So I went and I noticed just to make sure that the window was replaced 2 days before. It was. Another thing that was required was they had an old broken trampoline in the backyard that needed to be removed because she's elderly and didn't want it there. She had grandkids that could come over and she didn't want them to have access to that. It was still there 2 days before. So I always recommend if you have things that needed repair in your inspection requests and negotiations, or you had something that had to be completed before closing, that you go two different times. So 2 days before to make sure everything was completed the way that you wanted, because if not, and it's a big thing, you have to delay closing. And it's better to delay closing 2 days before closing than an hour or 2 hours before. So this was one example that then I showed up 2 hours before closing as well, and the trampoline was still there. So I called the listing agent and he was upset as well because he assumed that it was gone. So he picked up his son from school and the two of them came over and got rid of it while I was watching. But that was one example of making sure that everything that you agreed to inside the contract is completed, because if you go to closing and you sign, it's your problem now. Now it's yours.
Yep.
I do have one other example. I'm not going to say her name because it just happened. It was this week on Wednesday. They were supposed to close. They showed up to closing 2 hours before, and the upstairs laundry was leaking. And it had been leaking probably for a while because now it was coming into the basement and it had caused some major damage. So they actually dropped the closing altogether because of that problem. They canceled and they walked away. But if they would have just gone to closing, then showed up at their new house, now you have a much bigger problem.
Oh my goodness.
Yes. I have not experienced a last minute major issue like that, but because it just happened to one of my friends who's a realtor here, I was like, that's the reason.
That's the reason. Yeah. I had one last month that we were during that really, really cold time when we got like to 0 degrees. We were supposed to close and sellers were signing at one time and buyers were going to sign that afternoon just because of schedules. Sellers signed, buyers went to do the final walkthrough, and there were frozen pipes. And they found out they were frozen because they turned on the water to the bathtub, and water didn't come out. And so probably because water didn't come out, whoever turned it on didn't think to turn it off. Sometime overnight, so they postponed the closing. Sometime overnight, the pipes began to flow. The bathtub was turned on. It ran full force for who knows how many hours. And unfortunately, the bathtub was plugged. And of course, it was an upstairs bathtub. And it flooded a significant amount of damage. And had they not went to the final walkthrough, they would have walked into a house after closing with running water cascading down all the walls.
Oh my gosh.
Yeah.
Ugh. Those are terrible situations because it's really not a bit like whose fault. And then now it's probably going to be a big discussion and issue. Ugh.
Yeah.
Yeah. And that's part of the reason why it's important to have a realtor involved.
Yes.
Because that type of stuff or the issues that come up are so emotional, and it can cause a lot more problems if you don't have a professional person involved to help draw the lines and explain what we're going to do next.
100%. Yeah. The two things I would say when people say, should I have a realtor? I've had several folks that have done for sale by owner, and one of them, the seller signed up at the closing table and forgot the keys. And the house was an hour and a half away. My buyers showed up to the closing table with the U-Haul. Like, they were moving as soon as the closing was over. And the sellers were like, well, we're going to go out to dinner. Maybe you could just break the panel on the back door and let yourself in, and we could drop keys off tomorrow. And that's an example where a realtor would make sure that didn't happen to you.
Yes, I've had a situation where I followed the sellers to pick up keys and then brought them back to the buyer at the new house.
Oh my goodness.
Yes, I've
Yeah.
done that. Because
my-
the same thing, like, you're so excited, like you're there and it's almost done, and then you're missing the keys. I'm not going to make them follow the seller. The seller's done too. They're
Right,
done.
right. Yes.
And so I'm like, it's fine. I will just follow you. It wasn't an hour and a half. It was like 30 minutes. It wasn't that bad, but it's still,
Yeah.
I would never put that on.
Yeah. It was
On those people.
crazy. It was crazy.
Yeah.
So,
Do you have any other questions for me?
I think those are the ones that I run across the most, where folks ask me, and I'm like, that's not my lane. That's a realtor's lane.
Well, that's awesome. I'm glad that I met you on TikTok of all places. That's so funny.
I'm
'Cause
so
I've-
excited.
Yeah, I've met so many different people since coming here, but I haven't met you yet. And you're in Lexington.
Yeah, well, so my office is in Lexington. My husband and I, we live in Georgetown. But yeah, I am. We'll have to take this offline and meet in person one day. And I love the workshops that you're doing. If there's ever a way I can help out with that, I would love that opportunity to help folks.
Yeah, I'll have to reach out and let you know. Like I said, I haven't done anything in person for a while, but I've had people asking.
Mhm.
But my next thing, this will be for March, but I've already been working on it. I've had 4 meetings this week, actually, and I have another one tomorrow. I've been trying to encourage, oh, you saw that TikTok. I'm trying to encourage more deaf people to become realtors all over the nation. So I'm trying to figure out how best to set that up and to work with people. So the in-person events, as you know, you've experienced events in real estate. They take up a lot of time and energy as well. So I want to honor the in-person people and events too because they're better than online, obviously. But I'm focusing on that part of this business development.
That is so exciting. That is so. Do you ever do open houses?
So it's so funny because I moved here from Minnesota
Okay.
18 months ago. So I haven't been here long. But in Minnesota, I never did them. It was rare. Maybe I've done them like 5 times,
Hmm.
if that. But it's because I didn't see the value for my seller
Hmm.
with it. But now I've been learning from a bunch of different agents who are top listing agents and sellers, and they're explaining how to do them differently.
Hmm.
One woman, the reason I laughed is because one woman I talked with today, and she said, "Well, if you're not getting people interested in the house, then you're doing them wrong." That's what she said. I was like, "Oh, okay." And so then we had this long discussion, and I'm realizing, oh, I've just been doing them wrong.
Oh my gosh.
But also, you have to remember that when I first started in real estate was when everything you'd list it and 10 people wanted it
Yep.
immediately. So the open house to me was pointless for
Right.
the seller. But
Right.
now things are changing.
Yeah.
Yeah.
One of the things that I do sometimes with realtors that I work with for open houses, and I just think it would even be even more impactful for the community that you serve. Um, we'll do videos. We'll do like 30-second to a minute videos, and we'll do QR codes, and we'll put the QR codes in different areas of the house, and people can scan it as they walk through. So the realtor might put a QR code. Well, typically, in my experience, realtors are usually in the living room or kitchen as you come into the house, so they're greeting you there. But they might put a QR code in the bathroom and explain something about the house, like this house has a new roof or just something short. And then I'll do information about mortgages, short, easy stuff. But it's a really cool way for people who maybe you don't have a lot of conversation with at an open house. They might still scan it and you still get like 5 or 6 touches with them. And it kind of helps to build that rapport. And I find them to be a little bit more friendly when they leave the house because they were able to talk to us in a non-confrontational, awkward way.
That's really interesting. I've never seen that.
Yeah.
That wasn't one of the things she mentioned today either. So I've been learning a lot of new stuff. That's awesome. It looks like there are two people. It says, talking to the walls, it says, I appreciate the clear and detailed information. It helps so much. Well, thank you. That's awesome.
That is
If you
awesome.
have any other questions for us, we'd be happy to answer too.
Absolutely.
Looks like there's 3 people right now.
So I've been in the bluegrass nearly my whole life. I went away after college a little bit and then moved back. And my husband's from Wisconsin. We spent a lot of time in Wisconsin. What brought you to Kentucky?
Really, the short answer is God called us to move here. We had no plans to move out of the state. We love Minnesota. All of our families there, both of us. Our best friends lived right next door. We had a walking path between our houses. Our kids loved each other. They were growing up together. But during COVID, I was an interpreter, a sign language interpreter. And during COVID, everyone was home together. So we started praying together kind of accidentally. And we felt kind of all as a family that we needed to move. And we did start looking at different farms close by, like maybe 10 miles away, but we wanted to be close to family and friends still. And then Kentucky just kept coming up in odd ways. Like my kids would get books from the library about Kentucky, and then there would be something on like the books on tape that we listened to, and it was all about Kentucky for 2 chapters. Or we saw like a Kentucky license plate. It kept coming up again, and it was too many times for it not to be something that we needed to discuss. So then we prayed about it and we had our kids involved with that. They're very young, but we all were asking the same questions to God and we were getting the same answers, which was crazy. And so you can't deny it, especially when they're so young, right? And we had like drawings for them and they would draw things like horses. We knew so little about Kentucky. We didn't even know this was the horse capital of the world. We knew nothing, like nothing, nothing. And like people started, when we started to tell people, they would say things like the typical, like the hillbilly comments.
Mhm.
Like we literally didn't even know that was a stigma here, like nothing
Yeah.
about Kentucky. And we went and we talked with my husband's parents because they were who watched our kids when I worked, just to let them know, like, hey, we're seriously considering moving out of state. Like, what do you think about that? And his mom started crying and she said that God had been calling her to Kentucky as well. I know, right? And again, like from Minnesota, lives there, everything. And so we just decided, all right, Lord, if you want this to happen, everything needs to work out. So we took the next 2 years and really started packing and planning and praying about when to list, when to sell. And it's a whole long story. We ended up leaving an RV for a little bit, but we moved here together and my mother and father-in-law live with us in the same house. We have a really nice barn dominium. It was newly built when we bought it. The family that built it had a family emergency and had to move out of state. And so it was like this place, we'll back up this really quick. I know I said quick. I'm almost
No,
done.
I'm loving all of it.
When the Lord told us we needed to move out of state, I was actually really mad. So I wrote out 12 things that I required from God if we were going to move out of state. And this property that we ended up on has 11 of the 12 things. And we actually put in an offer 3 times on this house and they kept denying it. They didn't counter nothing. And finally, I was like, we have to meet them in person. We had a great realtor here. Her name is Laura. She's not a realtor anymore. She owns a roofing business, or she still has her license, but
Right.
she focuses on roofing. But so we met them in person and they explained their emotions about moving because they built this house as their like forever house, but the wife was very, very sick. And so they needed to move back with family in Washington. And I just started to explain how we moved here because we were in the RV here now. And I showed her the list that I had told God and everything that was in this place. I told her, I was like, I don't know if you want to hear this, but it feels like every time I told God something, he would tell you to put it here. Like everything from the type of fruit trees to how many raspberry bushes to everything. And I know it sounds crazy to people.
No, I'm here. No, I get it.
Yes. So that's how we ended up here. And my husband lost his job because he couldn't work remote. And I, obviously being a realtor, you have to start all over again.
Yeah.
But last year I hit top 10 in lifestyle within 4 months of getting my license here. So it was the Lord continuing to bless us and meeting the right people and people trusting us, like just moving here, which that was one thing that some people in Kentucky were like, oh, it's going to be tough if you move to a small town, people aren't going to accept you. And that has not been our situation. Everyone's been accepting, welcoming, kind. The kids have new friends that are amazing. It's been an incredible move. And all of us are like, it's crazy because this feels like where we should have always been, which is weird.
Wow. That is so, well, thank you for sharing. That is so awesome.
Well, thank you for asking. I know I said short, but I can't really, that is kind of the shortened version.
Sure. No. That is so awesome. My husband and I want to build a barnuminium. That's like, it's one of our goals. So I totally understand why you would see one and fall in love with it.
Yes. Do you want to buy some land and build, or what's your plan?
Yeah, so we both grew up on the outside of town, outskirts of town, and we live in town now. So we kind of both want to do that. If we could buy a few acres and build a barnuminium and just have a little bit of space, that's how I grew up with some space. So it would be cool to return to something like that.
Yes,
Yeah.
I love that. Today was so nice outside. We all went for a walk, and I was watching the kids running way far ahead of us, and I was like, I just want to stop because this is an actual dream realized.
Yes.
Because we've wanted this land for so long, and to stop and enjoy it and just, yeah.
Yep. All of that. Yep. All of that.
Okay, I'm gonna stop signing because my brain's gonna fall apart.
Oh,
We
you've
can
done a
click
great
it.
job.
Hopefully, I don't know. I'm gonna watch it back and be like, "That's not. I wasn't." We'll see.
I think you've done a great job. So if you ever wanted to do this again, I 100% would love to. If you ever want to do something in person, I totally do that as well.
Yeah.
Regardless, we should get together for coffee or a walk or something.
Yes, let's do that. I'll DM you on here my phone number too, so we can actually connect.
Yeah, no, that sounds great. That sounds really good. I would enjoy that.
Okay, and then we'll figure out how to do the side by side, like
We're gonna
everyone
figure
else.
that out next. We're gonna be unstoppable.
Yes. All right. Well, thank you so much for your time.
It was a pleasure. Thank you.
Yes. Bye bye.